So, does everyone remember Micron, the company who used to pioneer gaming graphics? But not anymore. They've pushed gamers aside, they've pushed gaming aside for something that vastly increases the size of their wallets. And this is their weekly chart. And as you can see, it's been quite the trend. So if you look to the bottom right, you can see that MU is up over 370% over the past year. And from this sector as well, we've also got SNDK, and over the past year, that is up 1,800%. This is the chart, and initially, if you're looking at this, you are probably thinking, wow, well, that's pretty extended. So now I want you to tell me the answer to this question. AI as we know it currently, whatever it is that you currently know about AI, do you believe that we are in the beginning or the end of the AI journey? And based on your answer, what do you think that means for a stock like SNDK, a stock that provides the also important components that AI needs to get the exponential growth that they're all looking for? Which leads me to the first reason why it's so difficult for SNDK and MU, and for that matter, a lot of the stocks in this sector to pull back, and it's that it is heavily AI dependent. And the demand for storage and flash memory is insane. If a multi-year, multi-decade AI build-out is beginning or ending, depending on what you think, that should really tell you about what you believe that this stock will do in the coming days, weeks, months, and even years. MU had also recently had their earnings, and their forward estimates were very positive, but that's not to be surprising, especially when these stocks are holding up so well while the market is mainly going sideways and just being extremely choppy. The S&P 500 tried again to break into its all-time highs today, and that level went ahead and solidified itself as a key level of resistance on the daily here. And we've kind of been in this move of sideways chop for quite some time, especially with the Qs, which is more heavily weighted towards technology. And technology is really where the moves happen. So if technology isn't doing well, it really tells you a lot about the market. But while that's happening, the data storage sector as a whole is very strong. SNDK closing higher on the day. STX closing higher on the day. It gapped up, but it did finish lower, but it certainly finished 2.66% up on the day. WDC also gapping up and finishing higher on the day. And we also have SIMO, which is trying to consolidate here, and it should just pull back at this point. It really looks like we have a lot of people taking profits here. We're getting these, look at these giant red candles. These are definitely profit takers. However, it's having a really difficult time just pulling back. Look at the 10 EMA just hugging price. They refuse to let this thing pull back to the 21 EMA. And it would be nice if we could just get a clean pullback into a key level. But sometimes that's just really difficult in leading sectors, especially when the market is going sideways, which is really just a miracle. And that just shows the strength across the board in this sector. Now, I'm not saying jump into these stocks right now, especially with some of them being really extended. All leading stocks pull back. That's a guarantee and a promise that I could make. All the leading stocks, they always pull back. There's never a reason to chase. However, when we know about them in advance, it means that we can prepare for them at really good pullback levels. For example, near moving averages, where things get tight, because that's where you get really giant moves for extended periods of time. Could the pullback happen here? We do not know. However, a pullback is certainly more likely. But if one thing we can see for sure is that if we look on the weekly chart, whenever we're breaking out of a key level, you can expect a big move. And that's about all we need to know, because key level breakouts will pay you for multiple days, even when you're not doing a thing. And it's just a beautiful way to trade because it is relaxing to sit and wait and watch the stock run. So I'm in SNDK, and I believe my position as of now is, let's see here, 66R on the remainder of my position, and I would love to get into more of these stocks from these sectors. However, I cannot do that while it is extended. However, if I'm already in, there's no reason to sell just because it is extended. We're going to just trail the moving averages here with the 10-day. And since the market is pulling back, we have a lot of great pullbacks in some other great sectors like space, which is looking really good. We have LUNR pulling back, SPIR pulling back, RKLB pulling back. So there's no reason to be all harped up about the leading stocks from the storage sectors being on an absolute run, even when the market is pulling back. The thing is, we do have other leaders from other sectors that are graciously setting up and just waiting for us to pay attention to them again. But of course, we need to wait for the pullback to be over, and there is a lot setting up on key levels. I'll cover some of the other sectors in another video, so go ahead and hit the subscribe button, and go ahead and like the video if you liked it, because I have a lot more to talk about when it comes to leading stocks from leading sectors. Peace.